Welcome to the C-Suite podcast from Money20 here in Amsterdam. My name is Graham Barrett and I'm going to be sitting down with some of the speakers and attendees here at the event to get a real snapshot of some of the main topics discussed. We're producing these episodes in partnership with LSEG Risk Intelligence, who provide a range of solutions to help organisations effectively manage risk and reduce fraud. Really hope you enjoy the episode. Well, pleased to say it's a welcome back to the podcast for David White, Global Head of Product and Data at LSEG Risk Intelligence. David, good to see you again.
Great to see you. It's great to be back. Another big event, Money20.
Absolutely, yeah. Let's pick up the conversation that we've been having over the last couple of years. And let's start with the big one, AI. How do you see that disrupting the landscape in the next, 12 months?
First of all, 12 months is a long time. 12 months is an incredibly long time when we talk about AI. So I think it's a difficult question, but I'll give it a go. I think what we've seen in the last 12 months is really that point where huge amount of enthusiasm, which is great. It's an exciting time in that evolution of that technology. But what we're really into now is that production reality. So we're going from the point of we can do exciting things to we have to get a return on investment. So I think the next 12 months is going to be a story of two acts in my view. The first one is what does it actually take to run these systems in a production environment, making or supporting critical decisions in the financial system. The second one is once we've got there, where do we go next? How do we actually get a competitive advantage from probably the insights that you're getting from this new technology? So I think it's very much going to be about scale. It's very much going to be about what opportunities open up from here. And I think it's going to be the hard graft of return on investment.
But try and paint a picture for our listeners, if you could, about what's actually going to materially change here, whether that's in financial crime, risk, or payments.
So hopefully, because we're in this emerging stage, what you're going to see is fundamentally a reduction in friction. And what that means for the very end customer is things should just be slightly smoother. I don't think you're going to see a radical change in any process, but let's take a typical area of friction for an end customer, which is onboarding. Now, onboarding is obviously expensive for the banks, it's complicated, it's the start of their risk journey with a prospective customer. I think what you're going to see is fundamentally the friction will reduce. It will be quicker, it will be smoother, it will be more consistent. So I think for the end customer, that's what it's going to mean. For the banks and the other financial institutions, I think what it's going to be a case of is looking at where the reduction in that friction comes from truly automating processes without reducing the governance and overhead, governance and compliance needs that go with it. So I think that's a careful balancing act. You'll hear this phrase a lot of human in the loop.
Yes.
And I think it's really going to be a case of where does that human in the loop sit in terms of really ensuring the governance and really ensuring the compliance, and where can we really allow the tools to automate and move forward?
Yeah. Now the challenges here for organizations is scaling AI, isn't it? So, and I guess that ultimately comes down to the strength of the data, is that right?
Yeah, I think that there is an old adage that has been around for as long as I've been doing this, which is garbage in, garbage out. And it's still true today. It doesn't matter how much you're doing with the latest generation of agentic tools, etc. If the data they're making a decision on or trying to interpret is poor quality, then inevitably the outcome becomes far more difficult to get a quality outcome. So I think what we're seeing is as we scale up these AI solutions, particularly agentic solutions, actually the dependency on, I use the term high quality data, which covers a wide variety of sins, becomes more essential because fundamentally the better the data is at instructing the AI tools on how to use it, how to interpret it, etc., the quicker those tools are able to make good decisions and deliver consistent results.
Okay. And what does that mean in regulated environments as well? How does that data quality underpin trust in those AI-driven decisions?
I think the important term there is trust. And I think what we're seeing emerging is we are going into a period where trust becomes a much more tangible commodity. So rather than this conceptual, oh, do we have trusted partners, etc., we're actually moving to a point where trust has to be much more measurable, has to be much more embedded into the products. And I think to make that example a bit more real, because it's a bit abstract, knowing where the data has come from, how it's been handled, and how it should be processed, and then being able to quantify that, qualify it, and measure it, is an example of how trust becomes a critical part of the system going forward. So I really think what we're going to see over the coming 12 months, for argument's sake, is questions coming back around that are fundamentally trust questions on how can I be sure I'm making the right decision? How can I trust in my agentic solutions? And that really is going to go back to the data, but also go forward from the data in, how you use human in the loop and all those things that, we've come to know and love as terms.
Yeah, that's right. Well, let's finish up on that agentic side. So AI making autonomous decisions. What needs to happen before we really, kind of let that go? Specifically from a governance guardrails perspective.
So I think the first question is, how much do we want to let it go? Because at the end of the day, obviously, this comes down to quite important things for people's lives, financial decisions, etc. So I think there's always going to be a balance on what the tool can do, which, I think fully autonomous decision-making, onboarding, etc. is obviously well within the scope and has been for some time, versus what we feel is appropriate for an ecosystem, for a regulated environment, etc. And I think it's really getting that balance, that there will be decisions that, absolutely, we can go fully autonomous. The risk to both the bank, the ecosystem, and the customer is quite low. There are other decisions where you want to say there are enough risk factors, enough risk indicators that ultimately, while the tool, the agentic tool, could make the decision, we'll still have that extra layer where we'll put the human in the loop, just so that as an institution, as an ecosystem, we're comfortable that everything is in the right place. And the great thing about that is I wouldn't view it as friction. I'd view it as a step that adds learning into the system, so over time the systems can become better at making more of these autonomous decisions.
Yeah. Well, we'll have to leave it there for now, but as always, David White, thank you for joining me on the podcast.
Thanks for having me. Cheers.
Very pleased to say that Sovan Shatpathy has joined me, who is SVP Product Management and Development at Oracle. Sovan, welcome to the podcast.
Thank you. Thanks for hosting us.
No, not at all. It's really good to see you. Thanks for taking the time. Now, I'd like to think about how organizations embed fraud prevention and cyber resilience into infrastructure from the start rather than as an afterthought. What are your thoughts on that?
It's a kind of a pertinent question of our times, right? Essentially, money movement is gone real time. So if you think about fraud, resilience, all of that is shifting left, Graham, if you think about it. It's no more after the fact. And then you have infusion of AI almost happening everywhere. So it really comes down to how organizations balance what I would call as the resilient infrastructure, operational infrastructure, and trust infrastructure. Because if you do not kind of anticipate and fix the issue at the source, the proverbial train has already left the station, so to speak. So it's a shift left mindset, both for the service provider, like Oracle, let's say, and for all the global banks across the globe.
Yeah. Listen, the economy of the future is going to be completely different. It's already changing as we're having this conversation, isn't it? It's going to continue to evolve. So lots of different innovations. Which do you see having the biggest impact? I'm thinking about digital currencies, electrical funds transfer, tokenization, and blockchain technology. Where do you see us heading next?
Well, I'll just phrase it in a more broader term and quickly answer your question. I mean, we have gone from the dot-com era to the cloud era to the generative and agentic AI. I would say DLT and blockchain are already there. And when you think about financial institutions, how you settle transactions, how you move money, how you tokenize assets, All of those are fundamentally disruptive in a good way for the global banking ecosystem. I would add to that also quantum computing. Sounds like rocket science, but it is not. Everything which is audacious and ambitious always sounds that way. So I see things like crypto, fiat, stable coins, NFTs, non-fungible tokens, digital tokens, and that becoming the fundamental way of cross-border money movement and beyond. What that also means is that settlement is faster. It's anonymous, it moves it, but it goes back to the same point. It's real time, it's in the moment. There is not hundreds of trapdoors to go through. So if you haven't thought through what's your digital footprint and how do you look at every step of the way, the journey, there is no way for a bank or the money movement chain to be traced back.
No.
So even as innovation is happening, it's very important that the trust infrastructure and the resilience infrastructure we talked about is built in from the source. And these are fundamentally interesting times. And to wrap with AI, it's more of infusing it in everything we do.
Yeah.
Yeah.
What do you see as the next major differentiators in banking? Is it going to be quantum? Is it going to be AI, real-time data, hyper-personalization?
Quantum is a little bit out there. So I would say it's probably like in a 3 to 5 to 7 year horizon. For banks today, it's actually a generation shift which is going on in tech. And banks are nothing but, in my view, digital institutions wrapped with trust. If you really think about it, if the big banks today, or even the medium banks, the credit unions, the community banks, don't think through how they infuse this real-time data strategy with AI into their business processes, more of inside out rather than outside in, I think they run the risk of either getting disintermediated or being left behind, because especially when you think about retail banking at scale, everyone is in your business, from fintechs to local banks to retail techs to health cos, insurance providers. Everyone wants to own the consumer financial well-being touch point. So in that world, how do you take this generational shift which is going on in tech and think inside out? If me and Graham were to start a startup today, I would say, I would think of AI as the operating system and the agents as like my way to interact with rest of the financial ecosystem. So it's a fundamental shift. It's not a sidecar strategy. It's more like the blood in my veins kind of metaphor. Did I answer your question?
You did, absolutely.
Okay.
What I'm kind of wondering now is, where is the competitive advantage going to come from then? If products and channels are largely going to be similar across the industry, what is it going to be? Is it going to be the ecosystems, the data intelligence? What's going to set a company apart?
I mean, until recently, Graham, the big buzzword, even in Money 2020 and all, was like omni-channel and digital. I say that a digital strategy makes you functionally complete but emotionally void. Speaking from a bank's perspective, sure, you can give me the same transaction across many channels, but do you know Sovan, the customer? Do you know my 360-degree relationship with you? So I think the big differentiator as we go into next 3 to 5 years is about how do you put, whether it's a B2B or a B2C customer, it doesn't really matter. How do you put the customer at the center, and how do you create a holistic relationship of all of my interactions with the banking institutions, a true relationship-based reward ecosystem where you know before I think, or like I say, show me that you know me and do it for me.
Yeah.
Easier said than done, actually. So real banks or fintechs or financial institutions who actually put customer at the center and can drive this relationship-based ecosystem with all the technology which is there as an enabler. Technology in itself means nothing. Will be the key difference in my personal view.
Because they're naturally placed to own that relationship, aren't they? They know our entire history, our entire spending habits. So really, the relationship should sit with them. Would that be fair?
It should sit with them, but if the banks are not careful, I think the relationship continues to move away from them. That's the challenge, because again, one term I didn't use is even the high-tech companies, right? Everybody, if your entire ecosystem is through a phone or in the future through a AI-enabled device, whatever it might be, who owns the relationship? The end bank, or did you become a commodity banking as a service provider? So it is very important that you have the touch point for your corporate, commercial, or retail customer and make everyone feel like you are special and you are the only one who matters to me.
Yeah.
Easier said than done again.
Easier said than done, absolutely. Well, That's been very interesting. So, Sovan, Shatpathy, thank you for joining me on the podcast.
Thanks for the opportunity.
Well, I'm very pleased to say that Garima Chaudhary has joined me, who is VP Financial Crime Compliance AI at Thetaray. Garima, welcome to the podcast.
Thank you. Very happy to be here.
Excellent news. So let's start with your session here at Money 2020, which is titled The Glass Box, How to Build a Traceable Risk Room for EU AI Compliance. So what does this risk room look like in practice, and why is it needed?
Well, I love this question because this helps you differentiate AI governance as a documentation versus AI governance as a operating model. By glass box, we obviously don't mean a physical room. What we mean is a living, breathing framework, which is keeping, the learning alive, and which is keeping all the feedback in loop as well, right? When we talk about glass box, we actually mean three key fundamental things. One, the right people. It's important that you have compliance, you have IT, you have data scientists, you have auditing, part of this AI governance, because it cannot be owned by just one team. And number two, right information. It's going to be crucial in AI governance in the glass box to make sure there is the right information, like explainability of the alerts which is being generated by the model, the feedback from the investigator. Everybody has to see the same single source of truth. And lastly, ability to act. That's the most important piece of this glass box, because if you're getting this information, you're getting output, and no one's able to act on it. If you're not able to make decisions to adapt to the risk profile, then it just becomes a binder on the shelf, and that's exactly what we are trying to avoid. So to me, a glass box is nothing but a live framework, which is bringing feedback of the investigator, which is keeping it up to date, it is fully explainable, and that's also crucial for the EU AI Act.
And then on the subject of financial crime and AI, how is AI changing the face and the scale of the threat that we're facing today?
This is an amazing question because, those who are new to financial crime, just to bring them up to speed, financial crime faces two big challenges. Number one, what we call very high false positives. So all of these transactions need to go through a transaction monitoring system to look for suspicious entities' behavior. And this is where the industry rate is actually 99% false positive. Meaning if a financial institution is generating 100 events or alerts, 99% of them are not good. So that's what we mean, that the false positive rate is pretty high. And the reason it matters is because if there are any events which is being created, as per the regulatory framework, and human eye need to look into that. So think about it, for a large institution or any payment provider, if they're creating tons of these events, they need army of people to work on them. And so just to summarize, there are two key problem financial crime and compliance team faces. Very high false positive and highly inefficient investigation, because they have, on an average, they log into 4 to 7 different systems to understand customer profile, to screen transaction, to do negative news search. So this is a key problem we are solving using AI. Thetaray has been leveraging unsupervised and semi-supervised model for quite some time to address that false positive challenge, because it doesn't just rely on the investigator feedback, which is labels basically for the machine learning model, and can look for those anomalies beyond the threshold which has been set by a rule base, right? So that's how we have been addressing that problem. And with our new agentic AI array platform, now we are tackling the second big problem, which is the investigation problem. So we are definitely all in with AI. Obviously, we always have been. We have been an AI company forever. And we are in a unique position to address the two critical challenges financial crimes and compliance faces. One, using those behavioral model to tackle the false positive problem. And the second one, using our array platform, our agentic AI platform, to again make the investigations much more efficient.
We're also talking a lot on the podcast at Money 2020 about identity, digital identity, things of that nature. So how important are strong identity signals and trusted data in improving detection across this whole ecosystem?
It's extremely crucial, because if you get the identity of the customer or customer's customer wrong, the whole transaction monitoring just fails. It means you're just looking at seeing it from a different lens. So it's extremely crucial. to keep the financial system safe and to keep the criminals out. Again, this is where we do a really, really good job of understanding customer, what we call pseudo customers, and understanding them better, because the financial institutions may not have. Actually, they don't have enough information about their customers, especially for payments, right? You may do the KYC for your own customers. You may have merchants whom you know about, but the merchants are also have their own customers, and you may not have information about them. So how do you segment them? How do you understand what their normal profile looks like? What is their normal activity? Are they supposed to transact in some of the high-risk countries or not? And this is where we come into play, and we go under the radar. We look for holistic view. We compare their activity with their historical profile, with their peers' profile, to look for those anomalies and to make sure we are detecting the suspicious transactions based on as compared to their normal profile. So yes, we do play a very crucial part from transaction monitoring perspective. We obviously work with institutions when it comes to high risk or a sanction screening checks to make sure the financial institutions or financial services industry is not exposed to known drug trafficker, known terrorist organization. And obviously we also help them towards KYC to make sure, again, they understand the customers they're onboarding, they're doing business with, and we help them manage that risk also pretty efficient.
And let's finish on a topical note. The Football World Cup is just around the corner, and the US Financial Crimes Enforcement Network, FinCEN, issued a notice last month about the threat of human trafficking across the tournament, something I'd never heard of in relation to big tournaments and big events like these. So what specifically is the threat, and what do organizations need to be aware of?
This topic is very close to my heart. So what happens basically is when there are big sporting events like FIFA World Cup, that does lead to a lot of exploitation risk, right? And so basically those who have not seen the the FinCEN guideline, it was basically to bring awareness back for the industry to make sure they have right controls in place to manage this risk. And so the reason exploitation or human trafficking is very hard to find is, I would say, mainly because of three reasons. Number one, if financial institutions are using rule-based system, then they're again looking for very simple behaviors like transactions more than $10,000, maybe money in and out of high-risk country, and human trafficking behaviors are extremely hard to find, and criminals do exploit exactly these rule-based system, and they fly under the radar. So the transactions and the behaviors they are doing are not going to be detected by rule-based system. So the one and also rule-based system are retrospective, right? So they can only find what you already know, and human trafficking or exploitation risk evolve very quickly and very at a very high, fast pace. So we don't know what to anticipate in this World Cup in terms of human trafficking behavior. So rule-based system are not going to be efficient to find that, number one. Number two, the criminals are exploiting multiple accounts to exploit victims, and so that's exactly what, again, rule-based system cannot find. At Thetaray, we do leverage, like I said, behavioral AI model to look for anomaly behaviors in context of the peer grouping and their historical activity. Something to keep in mind in these type of sporting event, the volumes are going to be very high because everyone's booking their travels, they're booking, making hotel reservations. And so what was normal a month ago is not going to be normal anymore. So if you have those hard, thresholds, everyone's going to be false positive. So the challenge is, if the financial institutions loosen that thresholds, they are exposing themselves to the risk of exploitation or missing out things. If they tighten up a lot those thresholds, then they're going to get tons of false positives. So again, these are the challenges industry face when it comes to exploitation risk, and where again behavioral AI can be extremely helpful because it can, it's very dynamic. So based on the spike, based on the unknown typology, it can still find those anomalies. It's definitely extremely hard to find, and why adopting to these AI technology is going to be crucial in order for us to be ready for such events in the future.
Oh, that is fascinating and frightening stuff at the same time, and certainly something to consider when we're all sitting down and watching the matches later this month. But Garima, Chaudhary, thank you so much for joining me on the podcast and sharing those insights.
Thanks for having me. It was great chatting with you.
Well, pleased to say that Tom Taraniuk has joined me, who is Head of Partnerships at Sumsub. Tom, good to see you.
Graham, great to see you as well. Thank you for having me on the LSEG and C-Suite podcast.
Not at all. It's great to have you. Now let's kick off today's conversation with agentic commerce, if you don't mind. We're hearing forecasts anywhere from 10 to maybe even 30% of online commerce could be agent-driven by the end of the decade. Is that a realistic number?
Well, this is what the card networks are saying, and everyone's getting on that bandwagon. And I don't think it's too much of an aggressive number. One of the things that does need to change is the consumer behavior, which we're seeing change rapidly. That shift we're seeing today, a good friend of mine as well is often saying that it's not going to be the future where agents are buying toilet paper, they'll be buying high-ticket items. And I think a lot of the bottleneck that we're seeing today is not, let's say, the actual infrastructure, which we have in place, but it's the guardrails, and it's thus the trust from the consumer in merchants and in these payment institutions for an agent to go forward and actually commit to purchasing a high-ticket item online. Sumsub did a online consumer survey, so it was our 2026 consumer survey for AI, and we found that 7 out of 10 respondents actually agreed that verifying AI agents and linking them to accountable entities would drastically boost their confidence. So we're seeing a bottleneck in confidence rather than infra at the moment.
And you're right, trust is the big thing here, because if I think about it from a personal perspective, from a consumer perspective, as you say, buying toilet rolls, I'm sure I'll be very comfortable doing that. These higher ticket purchases, maybe not so at the moment. So what needs to change for me and other consumers to feel comfortable with that?
The shift of focus from verifying an AI to verifying human responsibility and intent is there. We have a black box problem at the moment where merchants view AI traffic as unaccountable. You're looking at an AI agent and saying, who is the human attached to this? Do they actually want to make a purchase, or am I inherently going to be looking at a very large chargeback in the near future as well? Yeah. So merchants need a framework that defines an agent's machine identity, their intent, and what they mean to do in the future as well. And right now, that trust isn't there for consumers.
Now, this has big implications, doesn't it, for identity, AML, accountability in payments. How are we going to get through all of that? How are we going to change the way we think about those things?
I think for a lot of consumers as well as the merchants, I mean, it's a three-body problem. What we're looking at is the actual anonymity is the enemy at the end of the day for risk profiling users, their interactions with merchants, and inherently stopping their ability to pay fluidly across the board as well. So we are trying to solve this with human binding at scale, where you're looking at binding a agent to a user, as well as making sure that we can identify that these aren't botnets and these aren't malicious agents. At the end of the day, with fraud as a service and the democratization of access to these tools where you can create agents to go out and actually circumvent certain KYCs with a deep fake or synthetic identity. Imagine if you rolled that out as a person with your own 10 Mac Minis and an OpenClaw agent, and it would be quite fundamentally scary. So hedging, of course, yourself to a future where a lot of the payments are going to be, and you mentioned 10, 20, 30%, are going to be agentic payments. You need to make sure as a merchant you are protected and you can identify who is a real user, not only just a good user, who is a real user backed by an agent, and who is a bad one with malicious intent as well.
On that point, the EU is rolling out the European Digital Identity Framework, EUDI. What does that actually mean in practice for onboarding, KYC, cross-border payments, things of that nature?
By mandating that member states across the EU by December 2026 must have a unique wallet set up, they're moving the paradigm for KYC. Users no longer have to take a repeated photograph of their passport or identity. They can have one source of truth. But that also, Graham, can mean one point of failure, one central point of failure where they have their entire identity. I mean, we're seeing lots of countries where the ID schemes or these database schemes are still working, but of course rolling that across Europe means an interoperability issue as well. Lots of these member states will have it for their country country, there will be twofold interoperability issue and then adoption issue as well. We're not going to see the entirety of the population of each one of these member states adopt a digital identity on day one. We saw how that actually played out in the UK, and of course I think that was an atrocious sort of avenue, or at least the way that it was proposed to the UK market as well.
Now, of course, there's always a tension, isn't there, between making onboarding seamless and maintaining those strong controls. How do you strike that balance?
From our perspective, if we look at the controls of any business, it's striking the balance between frictionless onboarding and making sure that they're compliant, right? The dynamic risk profiling of users is essential in real time to dynamically send them down a workflow and a path which is adjusted to their profile. You want to be a brick wall for those users which you identify as bad or high risk, and you want to be a seamless river flowing the other users which are, sorry for the analogies here, seamlessly flowing them down the KYC journey. So from our perspective, we reject the premise that compliance and user experience are a zero-sum game. Reusable KYC, dynamic risk scoring, all of these things should allow users at the end of the day to become more confident that they have control and ownership of their profile, and that they are going to be treated better as a let's say, good user. If we're looking at for-profit businesses, the fintechs, the banks, and everyone else that you see here, they're all trying to onboard the same, let's say, user base. And however competitive you can be in the seconds and being frictionless will mean that you're onboarding said user. And yeah, you're adopting a lot of risk if you try and onboard all of them at once under the guise of just a seamless KYC, which is just a very easy KYC.
Absolutely. Listen, it's a shift in landscape, as we all know, but Tom Taraniuk, thank you so much for taking me through that.
Thank you very much for having me.
Well, joining me now is Paul Weathersby, who is Chief Product Officer, Identity and Fraud, UK&I at Experian. Paul, welcome to the podcast.
Thank you. Great to be here.
Yeah, no, it's great that you could take the time. I'd like to talk about your session here at Money 2020 first, if that's okay, which is exploring whether digital identity can help tackle Europe's growing fraud problem. Do you see digital ID as a genuine solution or as a part of a bigger piece of the puzzle?
So I think this is it's a really interesting topic, actually. So one which is kind of top of minds of many people. So I think, and there are a few complications to this. So I think if digital identity was implemented everywhere, then it would have an impact of reducing fraud. I think the impact of it could be temporary. So if you were to look at the kind of the impact that 3D Secure had, for example, on card not present fraud, it did suppress it, and it did have quite a lasting effect. What we've seen since then, though, is that the fraudsters have found a way to get around it. So I think over the longer term, unless fraud is tried to be tackled a different way, actually by stopping the people, finding and catching the people, then the effects may only be temporary. The other nuance to it, however, is that it's kind of optional in most of the places it's been implemented. So if you keep the alternative methods from or available to be used, then those alternative methods will be used. So effectively, people can bypass the digital identity journeys at the moment. So it's not necessarily going to stop anything unless that is the only option to use. But I think it's it can only really be seen as positive. It will have a better impact on stopping fraud. The more things you do, the harder you make it, and it's certainly a step in the right direction.
Yeah, absolutely. And what do you see as the biggest challenges to more widespread adoption of digital identity?
So the challenge from a relying party's perspective, so a relying party might be a bank who is looking to use a digital identity, is that there is actually a lot of choice. So there are many digital identities that would need to be integrated. So the challenge that a bank would have, as an example, is knowing which digital identities to adopt and having the time in order to do it. At the moment, with digital identities not really commonplace, they're left with a challenge of potentially putting other plans on hold to integrate digital identities, not really knowing whether the one they pick will be successful or not. So I think there's an integration challenge, there's a priority challenge. I think perhaps the piece which is missing is organizations to sit in the middle of it, a bit like what a payment services provider would do in the payment space. So a digital identity scheme could be compared to the card schemes like Visa, MasterCard, American Express as an example. What we don't necessarily have in the identity space at the moment is those like identity service providers that can integrate the services and take that integration pain away. So I think with the invent of those, which is one of the things Experian are looking to do, that will certainly help and make it happen.
And let's talk about the fraud itself. Where are you seeing the biggest shifts in how fraud is evolving? What are the biggest threats now?
So AI is having quite an impact. It's changing the volume of fraud that customers see. So I think almost what you'd expect to see is more advanced fraud, more complicated impacts, and I think that will happen over time with the use of AI. But what we're seeing at the moment is actually much more volume. So the common attacks that we were all used to are happening at much greater scale, and I think for the short term at least that's going to look set to continue. It's adding quite a lot of challenge to relying parties. So what they're finding is they're having many more cases to work through, which is increasing the cost. So that's kind of the topical challenge at the moment, is trying to manage many more applications. I think the defences are actually doing quite well at stopping the fraud, but the cost of doing that has risen hugely.
Absolutely, because the other challenge here is the striking that balance, isn't it, between security and that smooth customer experience that everybody wants and everybody expects. How do we strike that balance?
It's always tricky. So I think the way to do it is to offer dynamic processes. So having a static process, a one-size-fits-all approach is not the right way to do it. So having a dynamic approach which can assess the risk at the first stage and then dynamically alter it. So if the first risk assessment looks like it's going to be a low-risk case, then make the process as easy as possible, as quick as possible. If that first risk assessment makes it look like it's higher risk, then change the process, may actually add more friction, because potentially what you're trying to do is stop a fraudster at that point, and you're trying to make it as hard as possible for them. But it's not just a once and done process, like continually assessing the risk and continually evolving the process throughout the customer journey is what's needed today to balance kind of the friction where friction is needed, and to make it easy when you want it to be nice and fast and fluid.
Okay, well, let's just finish up with digital ID, which is being rolled out across Europe. How do you see that changing the fraud landscape, and what should organisations be doing to prepare?
So I think it would change the type of fraud. So I think it's going to stop some of the types of fraud. If digital identity is made mandatory and it's the only way to do it, then it will stop quite a lot of the deep fakes that you get. So fakes around documents will be stopped overnight, but it's likely to introduce different types of fraud. So in the payment space, we had the concept of money mules. I think we're going to have the concept of identity mules. The industry has actually already created a term for it before it's become a problem, because we can foresee it based on how that happened with payments. So I think that's likely to be a problem in the future that we need to be careful of. So yeah, fraud moves and it changes, and I think just being mindful of that is the best form of defense.
It's never a good sign, is it, if there's a term for it before it already happens? So.
I think it's not a good sign, but I think it's being cognizant. That the fraud moves, fraudsters adapt as well as the relying parties do as well. So I think it's a good thing that we're aware of those potential risks.
Yeah, being aware, being prepared makes sense. Okay, well, Paul Weathersby, thank you for sharing those insights, and thank you for joining me on the podcast.
Thank you. Great to be here.
Well, delighted to say that John O'Byrne has joined me now. He is CEO and Executive Director, Square International Block. John, welcome to the podcast.
Thank you. Afternoon. Good to be here.
Now, let's talk about payments, as we must at Money 2020. For merchants, payments are ultimately about trust, I would guess. Knowing a transaction is legitimate and that will go through, etc. Where is that becoming harder for merchants right now, would you say?
Oh, I think if you look at the explosion of activity out there, I can see really why it's becoming so difficult for merchants. So I would say maybe two things. The first one is I call it kind of variability or geography, but the number of ways that payments can come in. So the number of different payment rails that people can take it, the rails, as we say, in places like Money20. But if you're standing behind a shop counter, you can take it at point of sale. You might get payment over the phone. It could be online. So it's that multiplicity of places, all of which have different drivers of it. And I think the second piece then is around your ability to trust what's in front of you. So we've seen a big growth in synthetic fraud. So I think it's really flipped the question of trust. So it's gone from, is this card real, to is this person real? And not only, are you forced into accepting some of these payments, but you can still have chargeback rules and other things that apply months down the line. So yeah, a lot of challenges, but lots of ways to address it too.
And let's get back to basics then. How do merchants differentiate a real customer and a fraudulent one?
Well, I think in fairness to merchants, it's not their job to have to do that, okay? And that's why you've got businesses like Block and Square and many others that you see here at Money20 today, because the fraudsters themselves have become incredibly sophisticated. So I think there's a couple of things going on. But the platforms that we provide, we've got strong machine learning models that sit behind that. So again, we're assessing and going through every transaction in the milliseconds that it gets passed, irrespective of the rails that we talked about earlier. And we have different rules that allow us to put that up for review as needed. And again, we come to different arrangements with different merchants. Where do they want to set their threshold? What does their risk appetite look like? We obviously won't let anything we believe to be a fraudulent transaction into the flow, but we can also bring them in so that they're part of that decision-making process as well.
And what are their biggest pain points when it comes to fraud at the moment?
Probably things like this synthetic fraud side. You've got multiple people out there who are using the same tools that companies are also using to defend that side of it. So you're trying to deal with this variance of material that's coming into you, and you've also got all these different approaches that people are taking. So people have gotten really, really slick at this kind of synthetic look. I mean, I know that we've done interviews with people almost away from the payment side, and that people can use things like face masking online. So when you're trying to deal with somebody, it's really, really tricky to know that you've got the right person.
I mean, it's almost impossible, and that's only going to get worse, presumably, as these fraudsters and the tactics they use become so much more sophisticated.
Yeah, but again, the same tools are available to people in the industry, and you could call it an arms race if you want, but I do think that, between good regulation and good business planning, you're really able to build out, multiple controls against that. And again, it's about understanding what your appetite for this is, what's the right thing to do. And again, by building those pieces in the right way, you've got a lot of sophistication that sits behind to help combat that. And again, we're always seeing growth in payments, we're seeing growing businesses, and those various additional means of acceptance also allow us to really expand the type of business that merchants are doing. And we have a saying at Square, which is never let a seller miss a sale. And it's our job to make sure that they feel protected and trusted. And that's the job when you're in the payments business.
And presumably it's all of this infrastructure that goes on behind the scenes that just makes everything work. I mean, how hard is that to stitch everything together? Payments, identity, banking, to something that coalesces?
Well, it really fits with the theme here at Money20 this year, which is around the great rebundling. And one thing, certainly from a Square perspective, we've always thought in terms of being a platform or an ecosystem, because I think, to your point, you see a lot of risk at those seams. Okay, so again, if you're a merchant or you're running a business, you probably have multiple providers. So we've talked before about the wall of devices that can sit even inside the smallest restaurant. And if you make a business, distract itself from what its core business should be, so that they're trying to join up all these different services, well, that creates opportunities for people to exploit. But if you're with somebody like Square or Block, then that's our job to minimize those amount of surfaces, but also make sure that those joins just aren't there. So again, we look at it from that holistic perspective. We look at any transaction from millions of different data points, but because it's part of that joined up platform, it flows really seamlessly through. And again, it means that you're not trying to deal with, identity at one end, fraud in the middle, and a chargeback or an incorrect reclamation at the back end. And by allowing us to sort of orchestrate that across. It means from a merchant's perspective, they can focus on what they want to do, which is to grow their business and really, bring the passion that brought them to set it up in the first place.
Let's finish with AI, obviously another hot topic here at Money 2020, as it is at all these events, and specifically on the kind of agentic side that is obviously the growing area. How do you build confidence in systems making decisions on behalf of merchants?
I think a couple of things. I think firstly, you've got to train it on real data, okay? And again, you can only do that if you're a firm that has access to that data. So we always, as well as our full models, we'll also train specifically on the merchant's data. So that way they know that we're seeing things that reflect their business. So if you're running a barber shop and we see a transaction that comes in for, £1,800 at 2 o'clock in the morning.
Expensive haircut.
Straight away, right, we're on it. But it's the more sophisticated elements of that. So you train it on the data. I think the second thing is that you try and make sure that the merchant is involved or aware of the key decisioning, so that they're part, this phrase with AI, human in the loop. So we would say kind of seller in the loop, right? So if we start declining transactions for very good reason, but that leads to their approval rate or authorization rate starting to fall, well then again, we're leaving business behind. So you're trying to always find what's the best way to allow the best amount of good business to come through and try and stop any of the bad actors. And for me, those are the two key principles.
Well, that is a perfect way to end, I feel. So, John O'Byrne, thank you so much for joining me on the podcast.
Super, pleasure to be here. Thank you.
Very pleased to say that Mehmet Turkman has joined me now. He is the Chief Product Officer at Keycard. Mehmet, welcome to the podcast.
Thank you, and thank you for having me.
No, not at all. Now, let's start with an introduction to Keycard, if you don't mind.
Keycard is the largest payment service provider in Iraq with over 80% of market share. We have over 20 million active cards in the market across the global schemes of MasterCard and Visa. And we help, move the business in Iraq. I would say 30% of Iraq's GDP is running through Keycard. Okay, even we're serving as a payroll for the government. Okay, millions of pensioners are getting paid through our network. We have cash out points, thousands of them across the country. And the good thing about Key is it's pure local. All this evolution and all this development, it happened by Iraqis. There was no foreign involvement at all.
Yeah.
Okay, and it's 18 years story. It started at 2007. Today, technically, Keycard is the biggest Iraqi firm.
Wow.
Okay, in terms of revenue, in terms of turnover, and so on and so on. You can feel the importance when you meet the schemes like MasterCard, Visa. They are chasing us.
Yeah.
So it's very exciting.
Well, it's brilliant that you could join us on the podcast. Yeah. And what brings you to Money 2020 then?
So Keycard, we, after the huge success at Iraqi market, we we started looking cross-border, I would say, to after Iraq. Okay, so we started with the popular destinations of Iraqis. Iraqis, usually 90% of Iraqi travelers go to countries in the region, Jordan, UAE, Turkey, and so on. So we started operations, payment gateway partnerships in these countries. Then we said, why not go globally? Let's see, let's test the waters. So it's our first time attending as a sponsor. Yeah. We attended the show before as attendees, but this is the first time ever. And for Keycard and for an Iraqi company that's attending this event as a sponsor.
Yeah.
And more to follow, I believe.
Excellent.
Yeah.
Now, what we're discussing on the podcast, we're looking at topics around identity-related challenges, onboarding, things of those nature, and also the fraud prevention landscape. But let's start with onboarding and identity-related challenges. What are some of those challenges that you face at Keycard?
Actually, Keycard is doing something revolutionary when it comes to digital onboarding. It's the only service provider, financial service provider in Iraq that has digital onboarding. Okay. Today, you can, in Iraq, which is, we are the unique ones who are doing this, you can get your card delivered to your door without moving out of your home, okay? There's nobody else is doing this, okay? The challenges is, lack of, let's say, public infrastructure. Like there is no national ID system properly structured where we can utilize, where we can benefit from. But there are steps on that one. We are even helping the public sector to, regulate that part of the business. Nevertheless, we are, doing well in that. But still, the normal challenges that any digital onboarding entity can face, which is the public infrastructure, that we lack it, but we still, come up with workarounds for that. Plus the emerging new trends in the, in digital onboarding. Worldwide, 8 to 10% of digital onboarding fails for the, known reasons of fraud and impersonation and so on.
So let's move on to fraud prevention then. How do you see electronic IDs changing the face of that fraud prevention landscape? What good can they do?
It's, this topic is becoming a double-edged knife, okay? I was watching a reel, a while ago for a guy who's doing an interview, using another person's face. Okay, and the interviewer was telling him, I want you to put your 3 fingers in front of your face. And he couldn't, So digital onboarding is something nice to have. It makes life a lot easier for both parties, the customer and service provider. But with the emerging technologies that we have, AI and so on, I don't want to mention AI. Everybody's saying AI.
No, go for it.
Okay, but AI is resulting, whether we like it or not, in modern ways that helps fraudsters as well. So the case with that, there are checks and balances. Security also is evolving, and people are developing countermeasures, to cut that.
Is it a fight that can be won? Because as you say, in fraud prevention, we're using AI tools, we're using identity verification, but also the fraudsters are using AI as well. So how does that...
That's what I started with, I don't think it will ever become zero, fully won. That will be the perfect scenario, which will not happen. There will be always people creative enough, and usually fraudsters are creative more than the service providers. So that's the case,
And then just project into the future for us a little bit, just to finish off. How do you see this landscape changing over the next few years, whether that's in Iraq, where you're based, or beyond?
The emerging markets, the adoption for digital identity and digital onboarding in emerging markets, I think it will develop faster than how it was developed in the first country world, I would say. There is huge adoption. We see that in Iraq. We see that in the region. UAE, they have a government infrastructure called UAE Pass. I'm not sure if you are familiar with that. You can access. It's a unified system. You can access all your bank accounts using that UAE Pass.
Right.
It's attached to national ID system, very developed. We don't have that in US, where I lived, we didn't have such an invention, honestly. So emerging countries, developing countries, the adoption is much higher, I think we will see creative stuff in a faster pace there than, we see in Europe or even in US, Europe just started, yesterday I was going through the passport control.
Yes.
It just started and it was a mess. There's huge lines and so on and so on. In UAE, in Dubai, go land in Dubai. This was there 5 years ago. And it's very smooth. It's very smooth. You will not wait.
No, you're right. I had issues at Amsterdam airport that I haven't had at Dubai airport. You're quite right.
Exactly. So emerging countries, like developing countries, I believe emerging economies, the adoption is much higher. And, by nature, the technology is developed more.
Yes.
Because it was tested earlier in other countries.
Yeah. Well, this is brilliant. It's awesome to get a different perspective on things, to get the Iraqi perspective, which we've never had on the podcast before. So, Mehmet Turkman, thank you so much for joining me and sharing those insights.
You're welcome. Thank you. Thanks.
A big thank you to all my guests for taking the time to speak with me here on LSEG Risk Intelligence's booth at Money2020. I really hope you've enjoyed this episode, and if you have, then please do give us a positive rating or review on your podcast app of choice. If you'd like to get in touch with the show, you can do that via the contact form at csuitepodcast.com, or you can find me, Graham Barrett, on LinkedIn. But for now, thank you for listening, and goodbye.